sunny Cyprus is coming to an end, thankfully, and wherever you are in the world, take care and stay away from people. Basically, it's one of those diseases, but it's very easy to say, but very difficult to do. We're gregarious beasts. So let's get going. NFP day again, first Friday of the month. So numbers we're looking for. Let's actually bring the charts up, shall we? Rather than looking at my ugly mug. Let's just get the window set up. There we go. So what we've got here, this is the gold chart. We don't want a gold chart yet, but we'll come back to the gold chart. Let's start with the euro. Here, let me just see who's in. There we go. Excuse me. This is the 1 hour chart for euro dollar. Let's just go through the numbers that we're expecting in about 10 minutes. Consensus is a big wide range in the polls on the Bloomberg and the Reuters terminals as far as what's going on. Somebody's saying we're not started yet. Hopefully he's connected to me. Yeah, it's fine. Okay, I now started. Thank you, MHB. Okay, so welcome everybody. Any questions, please? As usual, let me know. Let's get rid of that. Why isn't that showing up? Oh, there it is. I just can't see it on my screen. Okay, good stuff. Hope you're well, my friend. Right, so a big, as I was saying, a big wide variance in expectations for the actual headline number. 8 million is the consensus on both Reuters and Bloomberg. It's a bit less, 7.75 if you look at the modal number. But anyway, it's a big down number. It's a huge negative number, but it's much less than last month when it was 22. Negative 22 million. So the question the market is looking at now, are these the two key months? Are these the two worst key months we're going to see for decades? So is the worst in with this data? So we shall see, obviously, when the numbers come out in the next 10 minutes or so. The other key number, as ever, that I'm obsessed with is the earnings number, expected to fall to 1% this month. It was it peaked up, or it legged up to 4.7% last month because the participation rate had fallen. But the other number I was looking at last month in particular was the U6 unemployment level. That had peaked to 22.8%. So we'll see what that one comes out. That's not the headline unemployment number. The unemployment number last time came to 14.7%. But again, the markets were expecting 16% plus. This time we're looking to, it's likely to rise. It could be a horrible number. It could be over 20%. 19.8% is the consensus in the markets currently. So I say we'll see what that number comes out. But do have a look and check that U6 number as well on our calendar, because that could be quite a key number for us to look at. And then the earnings number, obviously, the year-on-year as well as the monthly earnings number to have a look at. So that's the background. It's one of the volatile events of the month. Obviously, the data has been unprecedented as the global economy has moved significantly into recession. Some key countries already in recession. Germany, Australia moved into recession for Q1. First time in 29 years. This month has been confirmed or this week has been confirmed in the US, in Australia, I should say. Other key numbers, obviously the unemployment number yesterday was better than expected. The ADP number on Wednesday was significantly better than expected, although it was still a huge, close to 2 million negative numbers. Let's just put the charts back on. Right, lots of chat here. So we'll have a look at the actual in the assets. Saying buy or sell. Dollar weak or strong. Euro dollar. We'll come to them as well. Basically, what we've had, we've got a weak a weak dollar. Let me check this to the daily time frame before the data actually comes out. So the euro is just is an example. So euro as accrued here. This is our 9th straight day higher, over 113 today. We've got a combination of a weaker dollar and a growing USD. So this trend is very much on the up. If I just zoom that in, you can see, if we zoom that in even closer, hang on a minute. You can't see the chart I'm talking about. You can only see my ugly mug. There we go. So what was I saying? This is a daily chart, euro dollar. 9 straight days up now, back over 113, and right, okay, all right. I need to keep toggling between all the questions. Because I'm on lots of different platforms today. It's the first time I've done this for NFP. I've got I'm toggling between your messages from YouTube, messages from Facebook. So let me just try and bear with you all as the numbers come out. Let me just finish the story about the euro. So euro, 9th straight day up, over 113. And if we zoom this right in, we can see we've been sort of, actually, take it up to the weekly chart is what I wanted to do. There we go. You can see this sort of 18-month, 2-year downtrend we've been from this 125 area here. Back at the end of 2017, beginning of 2018. So the trend has been very much to the downside. Now we've got this hiatus, which is the pandemic. So we spiked up here at the beginning of March, February, and we spiked down really, really big volatile weeks. And look at the size of these candles compared to a typical week, just as we were trending down low. So the pandemic's completely shaken things up. So the question remains now, really, is this spike up this last 2 weeks here, is this a real turn in the market? Is this a real turn for the dollar? Or is this just simply a reaction to the pandemic? There's all this stimulus from the central banks, all this stimulus from central governments, trying to get economies up off their knees. So, time will obviously tell, as we say, but significantly, as you can see here, this is the 200 period weekly moving average, and we've spiked into it already this week. So that key line there sits at 113.75, and earlier today, in fact, if we zoom this in back to the daily time frame, I'll disappear off there. We can see we were at that sort of 113.70 sort of level here. So we were up here, back close to these March highs, and then if we zoom this one in, if I go back to the weekly again, we can see that we're back to these the summer of 2019 highs, back over here, over this 113 level as well. So last 2 weeks have been very strong for the euro dollar. As we went into the end of May and into this first week of June, it's been particularly strong this week, as you can see here, big old move up, and over this key 61.8 Fibonacci level as well earlier this week, as we this is this last leg down, this big sell-off. We went through that key level to move up. So euro, will the dollar continue to be weak? Who knows? We shall see as we go forward. So let's just have a look at some of my Facebook requests. Good to hear. Gold for, right, there's lots of stuff going on. Sell signal on gold around 430, says somebody. Well, we'll see, won't we? Why isn't that show? Oh, I can only show my YouTube comments. Okay, gold. Lots of you asking about gold over on Facebook, so we'll have a look at gold as well. Yeah, we've got a minute to the data, so let's me just go back to the questions. Where's my questions over here? On YouTube anymore. Euro, we talked about, I've got the euro up here. We've had a look at a question about cable here from KK. Again, cable, like all the major crosses here, the dollar's weakened significantly. The question is, how long is it going to run for? This is the, let's take this up to the daily time frame for cable. This is sterling, and again, another one that's at a key level, a key 200 period. This is the daily resistance. These purple lines are for some downtrends here on this weekly. So that's a big weekly trend line here that we're just above us now. This was a sloping support that we'd broken, that one, so that one can come off. I haven't been on this workstation for a while, so apologies about that. But again, you can see this exaggerated weekly moves because of the impact of the pandemic. Sterling sort of strengthened a tad this week on the expectation that let me just see if the numbers have actually come out. I'm talking, it's right on 3:30. So let's have a look at the numbers. Where are we? So. Yeah, numbers are breaking as I'm speaking now. So let's just go through this. So big surprise for non-farm payrolls. It's coming positive, 2.5 million. So big surprise. Non-farm payrolls, big shock, big surprise, coming negative. Obviously, this is the first reading of it. It may get revised as we go forward, but that's a very positive reading for the. Let me just take how the euros reacted to that in the 15-minute chart there. dollar picking up, euro falling down here. Big surprise, 2.5 million is non-farm payroll positive. It was expected to be a negative 8 million drawdown. Average weekly earnings better, not as good as expected. It's 6.7. Unemployment rate not as bad as expected. So people are obviously getting re-employed. 13.3%, still massively high historically for the US, but 13.3% for the unemployment rate for May. And very interestingly, the U6, that one area I just talked about, has come back down to 21.2%. Actually, see if I can. You can't see that. Can you got the data on? So let me run through that again. Participation rate down at 60% from 62, so that's ticked up a bit. The Canadian data is also better than expected, and we're just going to see. There we go. Just hopefully you can see that now. There we go. There's calendar. That's it. Thank you. So there we go. So I'll click through that. So let's just run through this again. So the headline data, 2.5 million, better than expected. Unemployment rate here, 13.3%. Still hideously high, but much better than expected. It's expected, sorry, there we are, 19.8%. Some were talking about 20% coming into play. So, you know, this will be quite a strong fillip for the administration and for the opening up of the US economy. So a move in the dollar, a significant move, better move in the dollar. Euro's already under 113 as the data breaks. Interestingly, the data out of Canada is also better than much better than expected. Positive 290,000 compared to a negative 500,000. So, and the unemployment rate ticking up to 13.7%. So it's only gone up 0.7 of 1% in Canada. It was expected to rise to 15%. So a remarkable surprise for the markets as we get that numbers coming out. So that should be dollar positive for the. Let me just bring in the screens. Application window. There we go. So as you see, euro moving down here, back under the 113 level. I guess that would be across the board. One would expect. Dollar index may have picked up. Yeah, dollar index has picked up. So perhaps back to the key 97 as we're moving up. So a dollar positive data. The dollar yen, which was relatively strong anyway, you can see in this 15-minute chart, rallied to 109.65 here. So that may finish strongly for the day. Cable still holding up here, but this is the daily one, isn't it? This will look moved down, no doubt. But yet still to 126.50, so it's still relatively struck bid. Cable 200 hour is down here at 125.85. So this is relatively bullish for the dollar. Toy, yeah, US do, but it's bullish basically. Toy on that data. It's a big surprise. Remember, markets don't like surprises, so they're always not sure how to react sometimes. So German 30 buy or sell. Let's have a look at the GER 30 DAX here. Moving up, the daily time frame has been very strong. We've gapped over the 200-day moving average here earlier in the week. So here we are, Monday, Tuesday, Wednesday, Thursday, Friday. It's strong week for the DAX. Here we are at 12,700. So that's bid. It's up. We're over the 200-day moving average. Intraday should be quite strong on the back of that data as well. It's bullish for equity markets. We gapped on open again this morning. So 12,075. 12,720 is our lid at the moment, our top at the moment. But we're more north of the 5 and the 9 moving average. These moving averages moving up quite nicely. So Kelvin, that's bid. Again, I don't know what time frame you're talking about, but certainly on the daily time frame, that looks relatively strong. Love, will the S&P 500 rise or fall in the 1 hour? Let's have a look then, shall we? The equity markets, as I say, should be relatively lifted from that, but if the dollar gets too strong, oh dear, we've lost my internet. I've lost my MT4 connection. Waiting for an update. Love, we'll come back to you, okay? Randolph's saying he doesn't trade the NFP. Well, that's understandable. It's very volatile. It's not for everybody. But you know, lots of pips can be made, as well as lost, obviously, on NFP day. A big sell on gold pairs and a buy on the dollar pairs. Well, we'll see. For some reason, though, my MT4 has gone to sleep. Dear. Such is life. Anyway, let's try and restart this one. Nope. Doesn't want to play. Just to recap, the futures market, the equity markets obviously are still an hour or so before the equity markets open in the US, but they're all still positive. The Dow's up 2%, or just shy of 2%, and the S&P's up 1.2% at the moment. And that should be, I'd say, it's definitely a dollar positive, and certainly that's how the market's reacted. So a big surprise for those numbers. I say the key one, the earnings have come down, but that U6, that headline unemployment number, again, not as bad as expected. So we didn't get to that psychological 20% unemployment rate, which is would have been potentially quite a significant hang on going forward. And really, that's when we get such a great big slew of unemployment, that can be quite sticky. So this is a very positive, quite a very positive NFP number. Obviously, it's only 1 month. It was expected to be the worst month. Perhaps the nadir, the floor was in April and not May, as the US started to open up quite early. Remember, Georgia and Texas opened up over a month ago now. So who knows where we go from here? But that's relatively positive. So for some reason, I can't show you the S&P 500 of all the charts for some reason, but everything else is okay. So there we go. Let's see if we can. Let's just fill that up. So sorry about that. Who was asking about that? Sorry about that, Hope. We'll have a look at that. We'll see if we can come back to that another time. Gold pairs. Let's have a look at the gold. How that's reacted to this very positive data today. And as you might expect, we're down significantly down. Now then, this 1688 here, or 1685 zone here on this particular workstation is a key support area. If I take this back up to the daily time frame, let's talk about the daily time frame. So we had this big rally up. We got to this 1664, 1663 intraday high in the middle of May. And then we couldn't break and close above the key psychological 1750. Okay, so we bashed into that. Now then, if we zoom this, if we come down, if we zoom this in, if I zoom that up, right. So this is the daily time frame. So we see this is our high here. And then we had this 1750. And then as we come lower down into the closer, the daily time frames, you can see, if we come down to the 4-hour time frame, you can see that this 1750, didn't hold. And then we went down to this 1725 zone. So this week, again, we looked like we were perhaps going up, but we had resistance through here at 1745. So we've moved down again, and then the key 1700. It's actually that's 1702, not 1700 itself, but that was the key level. So we went down here yesterday to test the 200-hour, rallied up, but again. Sorry, this is last week, not this week, because it's the 4-hour time frame. So that was our key level on the 4-hour time frame. So again, we come down to the trading 1-hour time frame. You can see this is our double resistance here earlier this week. So here, Monday, Tuesday, 1745. Now we've come down here, Wednesday, Thursday. We've been under the 200-hour moving average and capped quite significantly. So we moved down to test 1700. Let me move that line from. I don't know what it is. 17. No, that one. Is it that one? No. Okay. Doesn't matter. We just put that line in at 1700. Oh, well. Let's for the sake of argument, let's say that's our 1700 line, which is our support area. We bounced off it and a big move down, but now we're testing this 1685 level, which is a big daily support. So again, if we go back to the daily time frame, we can see that the big break up was the break of 1725, which again isn't on here. Let me just put that on there so I can show you at the top of the channel. There we go. Sorry, there's a lot of lines on there, isn't it? Because it's the 1-hour time frame on the day with at the daily level. Let's change that to a straight line. There we go. So that's our cap here. So we'd broken out of that for a few days this week and last week, and it was key resistance this week, which we couldn't get over. Significant number up here, 1725. So we're playing around with it. 45 is the top. Now we've moved down. So the bias is to the downside in these short time frames here. If we go into the 1 hour, you can see that's our 1725 level, which we breached on Wednesday, and we've been under it most of Wednesday, all of Thursday, and now all of Friday. So will we hold 1700 into the close today? Well, that's a strong dollar positive NFP number, so gold significantly weakened. So the levels below that is obviously what we're interested in. So 1685 is the first level here, this support through here, this band here, and then this area here, 1665 to 1650 is the next level down for gold, and then we're into this 1600 level back here. It takes us all the way back to the end of March on the daily time frame. So they're the key levels to watch on gold if we continue to unwind. So let's have a look at some other questions. I can't put the questions up from Facebook, unfortunately. I'll come back to you, Facebook guys, in a minute. What can we expect today on euro? Everybody's asked about euro. Well, we've seen what's happened with the euro. Let's watch pound. Yeah, I think you might be right. Do you think US tech will rise? I guess you're talking about the Nasdaq here. Let's see if I can get the Nasdaq up. We couldn't get the S&P 500 up, but let's try it on the chart. I've got a file, new chart. That's probably the easiest thing to do. There we go. So let's stick it. Use the same template. So we put our crossing template on. So the Nasdaq, let me just take you back to the daily story of the Nasdaq. So yesterday, significant level. Here we got to intraday highs, all-time highs yesterday. We poked to, yes, I put that line on. It's a bit low, but it should be 9,723, and that's what we got to. So we've had a very significant relative V-shaped recovery for the Nasdaq. And it remains bid. This is the 20-day moving average here, and we breached it here significantly for the final time here on the 6th of April. It was a key day there for indexes, and it was a big move up. First break was earlier towards the end of March. It looked like it was recovering quite quickly, but remember, it's the Nasdaq. It's all the tech companies, the big tech companies that are driving the other indices as well. The big follow-through buying came here as we went over the 200-day moving average a couple of days later. So that's continued to recover. Intraday, it's still looking relatively strong. The 4-hour remains bid. It makes dipping down, but the highs are getting higher into this new all-time high. Yesterday, that should be higher than that, as you can see. Let me just move that. And then the 1 hour will be the same, I guess. It's, moving up and just bouncing off these all-time highs as we consolidate at these new highs. So as the dollar improves, that might cool the run we've had in the equity markets. But remember, we're into June. It's a completely unprecedented effect, the pandemic. But it looks like that was, very, very strong NFP number. There may be some profit taken on the equity markets because we've had a very, very good run, certainly. For the Nasdaq in any way. Trading it with this strategy, we're just sliding sideways. There's no real direction today. We've been up and then we come back down. So it's really oscillating. It's the oscillation you need to be having a look at today. That's the 1 hour time frame. I don't know if you're trading in the 1 hour time frame, but obviously let me move this vertical line to, not vertical line, horizontal line. To 23, wasn't it? 23 was about on top, wasn't it? Top 43, not 23. Going mad. 43. Delete. Okay, so that's our top we've got for the Nasdaq here. So there we go. That's the Nasdaq venue we just had a look at. Okay. Hourly earnings negative. The word, Daniel, the number, but really it's better than I expected. The whole order, the headline. What's really going to grab the headline and the the occasional trades is this was a big variance from what was expected. Remember, as I said before, the data came out. The the consensus was for a drawdown of 8 million for May, but there was a big gap in the requests between about 1.6 million negative still and 17 million negative from one of the analysts. So huge numbers, but it's come out positive. It's come out at 2.5 million, so 2.5 million gains for payrolls for May. So it's very positive. So there we go. Dollar having been hammered quite significantly. Go back to the dollar. You're all talking about the dollar, euro dollar. Having been hammered for the last 9 trading days here against the euro, finally coming back to life a bit. But look, on the daily time frame, there's still an awful lot of that recovery to give up. So obviously intraday, if we come down to relatively big recovery, but perhaps not as big as you might expect, given that we're now 15-20 minutes into the news being announced. The analysts are out speaking to their clients, or at home speaking to their clients and analysing what does this all mean, a bit like we're doing here. It's really, it should end up dollar positive, but the markets, will absorb all of this and see where we go forward. So the central bank will say, well, that's stimulus. It means less pressure on the Fed to talk about negative interest rates. They'll say they've got enough equipment in their toolbox, their stimulus, their direct stimulus of companies and businesses is working or has worked, but it's early days in the recovery. But obviously, as far as the death rate and the new cases is concerned, it's dipped significantly. We're over the peak. It's coming down in Western Europe and the States. Unfortunately, the epicenter has now moved to Latin America and the Caribbean, particularly in Brazil. But as far as the big US economy is concerned, it seems to be coming back, or relatively back to life. So there we go. Somebody's asking about the pound against the yen, the old guppy. We've had another one that's had a very strong run here. This is the daily time frame for pound yen, and it's more to do with the weakening of the yen, a bit of bid on the pound as well, certainly. So you've got a weak one side, strong the other side. It only goes in one direction. So again, another one that's in a strong rally here, and I think we're into 8th or 9th, so that's 1, 2, 3, 4, 5, 6, 7th day to the good. And again, over a key 200-day moving average there at 136.60 here on Wednesday, where we breached, followed through for Thursday, and a strong day so far today. Pound on the up, yen being sold as risk comes back into the market. You can see this is the 1 hour, and again, the 1 hour traders, that's a big candle here yesterday at 1800 hours closing above there. That's been positive ever since, as that's rallied up. Pound yen continued to move up. 4 hour will look fairly bullish as well. 38.65. So where we're going to go from here is daily up there. So here to the daily time frame, another whooshy sort of recovery, having broken out. The key support is now our 200-day moving average here at 36.60. And next resistance sits at 39, full number, but 39.50 was a level. I don't know why that's actually on there, to be honest. So I would say 140 rather than 139. Next on the daily time frame for sterling to recover against the yen, but it's been we would expect a bit of a pause in this rally, potentially the 200-day. It never happened, so just go with the flow. It's getting a bit steep. It's moving into overbought on its RSI. I've only got RSI on this chart as an oscillator, but we are currently trading at 72, 72.8, so 73. So touching RSI, there may be some profit taking to close the week out, because it's had a very, very strong week. Pound yen, again, it all depends, Sibusi, on your time frame. I nearly got caught with elbow bump. I don't know what that means. Looking at a big sell on cable. Well, my friend, you pick your time frames and take your choice. Let's have a look what my Facebook friends have got to say. Let's have a look. Martin was asking about pound yen as well. Sorry, I can't display your names in the from the Facebook questions. So Carmen saying, I have a nagging bullish bias in the back of my head. I can't shake it. There's nothing wrong, the thing about, I would like to show that question, Carmen, my friend. He's just written here, I have a nagging bullish bias in the back of my head. I can't shake it. And that, Carmen, is, one of those issues, because we're all, we're humans, and we're easily biased. It's very difficult to get rid of our natural bias, and that is what technical analysis can do for you. Trade what you see, not what you think. Have a system, follow the system, be as disciplined and as emotionless as possible when you're trading it, even if you think it doesn't make sense. If your system, over a period of time works for you, just follow the rules, take them all, take all the signals it gives you. A lot of them are going to fail. And that's what this business is all about. It's all about managing your emotions, managing your losing trades, and making sure they're quite small when you lose, 1 or 2% of your account, and let the winners take care of yourselves. So there we go. Ghazi saying hello, Ghazi, my friends. Long time no see. Gold, Ghazi's asking for. So let's have a look at gold again for my friend Ghazi. We were talking about it earlier, Ghazi. I don't know if you were here. There's no time actually on your question there, but let's have a look. Gold again. So the gold market, let me just reiterate, we have rallied to this 1764. Looks like we may be shaking out because the highs are getting lower basically. And let me just go back to maybe somebody on. Who's asking about gold? Malak's stuck on cable. We'll come to you in a minute, Malak. Okay. What do you mean by stuck? You have a target, you have a stop loss, shouldn't be stuck. Either of them get hit, you get out. You get out with a loss. If your stop loss is hit, you get out with a profit. If your take profit gets hit, or are you stuck with what to do or what you're thinking? Anyway, let me just finish this for Ghazi. So daily time frame on gold. Excuse all the lines, but this is the 1 hour time frame zoomed out to the daily time frame. So there's lots of yellow lines on here. But basically, we had this big rally in mid-May, 1764, 1750 then became our resistance, and then if we come down the 4 hour and the 1 hour. Where am I? 4 hour. We can see there's at 1750. And then this week here, as we started June, we've had a high at 1745. So we've come down. So we've come down from our spot. Obviously, that's our pivot high here, up here at 1764. 1750, a big psychological number. And then we've moved down at 1745 this week on the 4 hour and the 1 hour time frame. So you can see that 1745 level here. So then we've moved down. And then what's happened later in the week, we've breached the 200-hour moving average here late on Tuesday. Wednesday, we were all the way under the 200-hour, and we spiked and tested, broke the 1700, the key level, came back to it, but then spiked as low as 1689. 1685 is the next big daily support, and that's where we spiked to after post NFP in this hour. So recovered a tad on Thursday, but couldn't get back over the 200-hour. So again, that was another weakish sign. And then here, again, if you're trading this on the shorter time frame, that gold went short for you this morning here at 7 o'clock as the 5 and the 9 EMA crossed, and we went under and closed under the 20-hour moving average. Your stop loss would have been up here, different ways of doing it. You can count 5 candles back, the turn, or you could have had it back up here at the turn in the market up here somewhere. But certainly you're still in that trade, and then NFP, if you've held it because of NFP, obviously could have gone the other way quite significantly, but you've very much in profit there on that gold trade. So Malik, you're asking about stuck on cable. I'm not quite sure what you mean, my friend, but let's have a look at cable. Cable, it's a white chart here of cable and some of the other charts. So again, daily remains bid. This is, as I said before, it's 1, 2, 3, 4, 5, 6, 7th day to the upside now. These green candles, some up a tad. So strong week this week, some significant possible profit taken, and right into this 200-day moving average here at 26.55. So you would expect a bit of stalling at that key resistance, which is what we're having, and we're testing it literally as we speak. So lower time frames remain bid. That line here is a weekly trend line, which we've sorry, it isn't. It's which we spiked to on the 4-hour time frame. So we're through that one, and on the upside, and the 1-hour time frame again holding up over this trend line here. So again, another one that's been above its 20-hour moving average since lunchtime yesterday. First up, retrace, but again, that's one that has kept you in the trend there. It's up, it's consolidating through the Asian session, quiet volumes, and then volumes pick up into the European session, and 126.75 is our high on cable. So again, Malik, let me know what time frame you're interested in, and we'll have a look at it in more detail if you like. Let's see if there's any more questions. We'll toggle between the two positions here. Thank good analysis. I also produce gold. Right, Rani's saying this. Ghazi's saying thank you for that. No, that's okay. It's no problem. Yeah, cable maybe we've run out. Pound yen we have a look at. Gold we've had a look at. Anything? Anyone else? Anything? Enoch, good afternoon to you, sir. Hope you're well. Any more questions? Gold we've had a look at. Gold. Everybody's looking at gold today. That's certainly moving down. Cable, euro. That was before NFP. Pound yen. We've had a look at pound yen. Okay, let's go back to. Otto's saying a big sell on cable. Bullish hammer forming on USD CAD 1 hour. Yeah, sorry, I should have mentioned USD CAD, shouldn't I? Because CAD also had their employment data out. Also better than expected, perhaps not as spectacularly better than the Americans. But look at this. This is a 15-minute. But let's just take a step back first. Where are we? So the daily time frame here, dollar CAD. Big break here. We were in a big old channel for April. Well, we were under 142 base. It was the top of our channel for April and vast majority of May. And we had the big break, or the last break under the 20-day moving average here. I'll come down to the 1 hour chart afterward. Don't worry about that. Here on the 18th of May, that was but we were still in the channel. So it was a week sort of break, although it was a big engulfing candle. Sideways for 3 or 4 days, but we didn't get back over the 20-day. Actually, let me zoom in over. Didn't get back over the 20-day moving average, did we? So we retraced. We're moving down. The highs were getting lower as we were here. So that was a lower high. Retrace, 20-day held, and then the big sell was this one here as we came to the 26th of May. Another big candle from many Forex crosses on the 26th of May. For me, it was the break at the bottom of the channel, the 39.00, and then we've just moved down very significantly since then as the oil markets continue to pick up. Obviously, that's helped the Canadian dollar. So here we've moved down very, very significantly from the break of 139, 400 pips plus under 135 yesterday. That's another significant potential support zone. And here we got the 200-day coming in, and here today, if we go. We zoom down. Let's do it steadily, 4 hour. So here we are, 139 provides support for quite a bit of this week. Again, I'll put the breaks, the periods. Oh, it's already on actually. Yeah. So for all of this week, it's held, and now less today and today, big break. If we come down to the 1 hour time frame. Of the 138 today, pre-NFP. So this is the start of business today. And another big move down. So have we got oversold? Well, MACD here, very simply, still moving down. RSI here at 14, still not oversold. So even on this hour time frame, we're still tilting lower. And here we are under 134.50. But as you say, my friend, that last hour candle, which is just finished now, isn't it, at 4 o'clock? Very, very interesting. Look at that. Huge doji candle. Look at the length of that wick there. Testing and probing under 134. So for end of day traders, they won't be panicking. They're still seeing that going down and testing the 200-day moving average. 4 hour traders still relatively positive because we broke under the 135 for 4 hour traders. 1 hour traders, bit more activity. But interesting, some support, and if we drill down, there'll be some definite sort of pin bars forming to get you back in long on this one in particular. 30 minutes, not too significant. 15-minute, but look at that pin bar there, that hanging hammer on that 15-minute candle there. So perhaps some upside here for the dollar against the CAD, but the CAD, I say the data was good there as well. So we shall see. I hope that's answered you. I run off very quickly. Isaac, I don't know what you mean, my friend. Are you talking to me or are you talking to somebody else on here? Isaac, I don't know. But anyway, yeah, very, very, that's the 15-minute. You see that one there. But again, you see the MACD still negative here. Big histogram's moving down the signal line here. So that still remains negative. And again, simple moving average cross. The cross was earlier. This is the 50, obviously the 15 minutes before the 45 minutes. No, it wasn't. I'm sorry, it's Q2 time, so it's quite a way before NFP. But it looked like it was going to move up. Didn't get back to 135. Again, some sells up there at 135. Nice. So again, a 15-minute trade that would have triggered a short, and you're still short on that one, and you've moved all the way down. You perhaps have got an awful lot of pips on a 15-minute trade on dollar CAD there, because they're both Canada and the American surprised with their data today. Any more requests other than what we haven't talked about? So let's just go back to the majors, see what the dollar index has done. So we've had a recovery in the dollar index, although again the daily time frame continues to move down. Remember, this is a very narrow. No, last comment on Facebook was Ghazi's gold and K. We had a look at that. Yen, we've had a look at. Gold, we've had a look at. So, right, I'm just going to run through into the majors for obviously the end of the week, the end of this first, another incredible trading week, the first week of June on these time frames. So dollar index on the, let's just run through the major time frames. So dollar index on the daily time frame remains weak. We're under our key 200-day moving average, which sits all the way back up there at 98.45. The breach of the, again, another one that was channel bound. We'll see this quite a lot during April. And let's just put that on there. You see the channel we were in there, top there about 100, and the support through April and May was 99. But again, breached significantly here towards the end of, again, another 26th of May breach on dollar index. And we've just, excuse me, we've continued to trial down there on the daily time. So the dollar index remains weak. 1, 2, 3, 4, 5, 6, 7, 8, 9 into our 10th day down. Have we got oversold? Excuse me. That's what happens when you drink cold coffee when you're talking at the same time. Stochastics oversold here on this chart here. It's the only real oscillator on it. RSI got oversold here this week into down as close 22. So you might expect some support at 97. We'll see where we close the day. The dollar might get some more bid as the cash session open. Remember, the US markets open in 25 minutes. Huge bounce, saying the job sale. We'll summarize that when we close. But so dollar index remains to the downside in the daily time frame. Euro dollar. Let's again, daily time frame, a big rally. Have we rallied too far? Is 113.75 our peak for this rally? We shall see. But I say that's a very dollar positive data, but day isn't over yet, so we can't tell. But certainly, past 9 days have been very positive and over 113. Will we hold that going into the weekend? The reason the weekly candle is important is because it's right up here, and we're just, it's below that key 1380 for the 200 hour. I'm not. Is that the exponential? It's the exponential. I'll bring that down to the simple. Yeah, that's simple moving. I thought there we are. The 200-day simple moving average we tested. I knew we had on a daily basis. So where's it gone? What's the weekly one we're talking about? It's a daily one there we've gone over. So the weekly one we tested earlier today. So that's the big resistance area, and the previous high here we had in February before the that big sell-off we had. But the recovery earlier in the week had broken the key 61 Fibonacci sell-off of this move down here. So bit of pause you might expect. So euro certainly bid for last week, certainly bid for this week. what will the second and third week of June bring? Well, we should see, won't we? But so that's a key line in the sand at 1300. Cable, similar sort of story on the daily time frame, recovery not as significant, bullish as the euro move up. But certainly positive tones for sterling as well with regards to the EU trade talks. So we've had a strong week as the dollar's weakened this week. But again, another one that's ran to its 200 period moving average here at 126.65 today. So again, 1, 2, 3, 4, 5, 6, 7th consecutive day up, breaking potentially these previous double top highs here through 126 itself here and here. So again, see where that finishes. Again, if we go up to the weekly, which we're sort of completing very, very strong week there for cable and closing over its 20 period moving average for the week. And that's our weekly trend line up there, though. So that's still a way above us at 27.70. So is this a retrace of this general downtrend? We shall see on the higher timeframes. But daily looks relatively bullish as well. Over the last 2 weeks or so. So moving up. Cable. Dollar yen, on the other hand, both of these currencies have been under pressure this week. But dollars had the upper hand and we're back over 108 which we, this week, which we hadn't been for a long time, testing lower. This is a daily time frame again. So another one that was drifting lower during April, drifting higher, no big deal here during May, and here a move up as the bid on the yen has weakened this week, first week of June, and we've ran here to 109.50, the yellow line. Can't see that very well, can you? It's yellow on white, it's not great, is it? But 109.50 key level, and then if that does hold, looking to move, we are moving into an overbought status here for dollar yen as it's moved up stochastic significantly into the overbought zone. So perhaps some cooling at 109.50 on this time frame. But if we keep going, we break 109.50. Next resistance, that's a huge candle here, isn't it? We're into this top there at 110.85. So 109.50, 110, and then 110.85 takes us all the way back to these March highs, and then the actual daily close high was there 111.25 for dollar yen. Will we get to those dizzy heights? Who knows? The market never changes direction, no matter what NFP or not. Elbow cough. Yeah, well, we'll see, Eric, my friend. Market does what the market does, and again, all successful traders with any length of time in the market will say, the market does what the market does. So have a system, trade your system. I say accept your losses and just bag your profits. There we go. So that's dollar yen on the daily. Intraday, the 4 hour will be positive as well. There we go. That's at 108. That 109.70 area, that yellow line, not 50, but so we're holding over 109.50 at the moment. And 1 hour also holding over, also relatively well bid, and a big strong up candle for the dollar following that very strong big surprise in the NFP. Australian dollar, another one that's had a right old run. Here today we were testing 70, and it's still very well bid here in this 1 hour time frame. If we go up the time frames, you can see strong run for Aussie this week, and that continued, all the way back to this extended 55 low we had in the doldrums of March. This 12-year low, and it's continued to recover. And another one that's been over its 20-day moving average since this early first week of April. So we've had April, May, and now the first week of June to the upside for the Aussie dollar, and recovering to the big psychological 170. The Australians coming out of the pandemic strongly. Not obviously people dying in Australia, but relatively for the size of their population, and 5, 6 big cities coming out of it relatively well. And the central bank there saying they don't need to add any more QE. They're very anti-negative interest rates, the RBA. So Aussie dollar on the way up. Big old strong recovery. Is it going to continue? Well, the trend remains very much so. Very overbought. Well, not very overbought, but overbought all of this week. So we broke into the overbought zone here on RSI earlier this week on Monday the 1st, and we spent all of June in overbought zone. That'll be reported, no doubt, but we've had a big old rally, haven't we, from the close this time last week at 66, and here we are at 70. So 400 pip rally for Aussie dollar in the first week of June. That's a headline you could write yourself, couldn't you? Big, strong week for the Australian dollar. Same with the Kiwi. I haven't actually got the Kiwi there, but and same with the CAD, really. Actually, the Kiwi's there. Let's do the Kiwi because they're obviously very closely aligned with the Australian dollar. Again, another strong recovery from these. This is an 18-year low for the Kiwi down here. And again, through some key significant levels, the Kiwi itself. Let me just bring that back. There we go. 61 initially looked like a bit of a stretch a few weeks ago, but 62, 63, 64 became support. We rallied through 65, and that's where we are today. 65.50 has been our sort of stalling area today, but this is the 1 hour again for the Kiwi. So again, another one that's well bid and just sort of drifting about with the oversold zone. So the Kiwi again, another one that's moving up very nicely as well. Dollar CAD, as I said earlier, we had some very strong Canadian data as well as the US data earlier. So let me just go through the Canadian data. The unemployment or the employment change was a positive 290,000 from an expected 500,000 job loss, and it wasn't. It was another positive one. Earnings have held up around 10%. And the unemployment rate isn't as bad as expected. It's gone up from last month, but it's at 13.7%, obviously record highs, but it's not as high as the market was expecting. The market was expecting 15% plus. So another good piece of data from both the key North American economies today. So dollar CAD on the daily, as I said earlier, sideways here for April and May in a channel, 142, 139 floor, 142 top. Big break of it here, 26th of April, 26th of May, I should say, and I was a break of 139, and then here we are under 135. So still to the downside and under that key 200-day moving average today. See where that finishes the week. Dollar CAD, oil I haven't mentioned. Nobody's asked about oil, but oil's holding up over the key. This is US oil holding up over the key 30. $35 a barrel. Sorry, I was just looking at some other questions that have come in. Somebody's asked about gold again. Martin's asking about cable for the rest of the day and gold for the rest of the day. Imran saying gold strong on the daily. I'd question that, Imran, to be honest. It looks like we're perhaps biasing to the low side. If we close under 1700, certainly that would be a weak for gold. This is Facebook, isn't it? Martin's asked about cable. Martin, I'll come back to cable. Okay, in a minute before my hour's up. So where was I? Yeah, gold. So sorry, not gold. Oil. US oil to the upside. $38 has been breached. There's still obviously this week there was talk of the Saudis and the Russians agreeing to extend production cuts into July. There was supposed to be a teleconference yesterday. It didn't take place. There's talk about it taking place tomorrow, maybe Saturday the 6th, but it was originally scheduled for Monday and Tuesday next week, which got everybody excited and the oil market rallied up. We had a build in a drawdown in inventories, so that's helped the demand. And also into June, it's typically the big driving season in the US starts now as the graduates graduate and Americans take their holidays at the beginning of June. They all jump in their huge cars, their huge engine cars, and needs lots of gasoline. So big demand for gasoline, typically during the summer. Is that going to happen this summer? Will they be driving around as much with the pandemic? Will they be doing as many holidays? All the states, all 50 states now, in a process of releasing lockdown, even New Jersey and California and New York. But worry is obviously the second wave. But that the story remains. Obviously, the jobs have been people have got back into jobs. I haven't looked at the data yet. Obviously, I've been talking to you guys, but the detail will be interesting to see what type of jobs and the spread of the type of employment has been rekindled this month. So quite a big surprise for the markets. So oil, yeah, here we've even spiked to $39 again, so $40 next line in the sun. Let me just put this on this chart here. That's a key level, isn't it? If we've got to $39 today, so another one that's had a very strong week. The oil market, we take this up to that's the 1 hour time, we take this up to the daily time frame. So again, another one that shook out. Remember the April contract or the May contract at the end of April went negative. And we've just recovered quite significantly through the key $25 level, and next line in the sand now appears to be $40, and the 200-day moving average for US oil sits at $42 here. So that's a next key technical level. But again, you can see how the 20-day moving average has been your friend there right from the beginning of May. As we broke the 20-day moving average on this particular strategy there, that would have taken you long, and you've been long ever since, basically, because we haven't closed under the 9-period moving average, which becomes your sort of stop loss area there. So trailing your stop loss up through $20, $25, $30 is now our key sort of support. 33, we staggered a bit or stalled a bit, but the trend continues up, and the trend, if you're a positive, if your long oil, remains your friend, as it was as we went down. The key thing here as well, remember to bear in mind, is this gap here. This $40 is psychological, but we had a big gap here over the weekend at the beginning of March. So that gap needs to be filled at some point. And the bottom of the gap now, see what it does? It's not by coincidence. It's around $42 where the 200-day moving average is. So that gap there needs to be filled, and that's going to be a next target levels if we get through $40. So the trend remains up on expectation that the big producers, Saudi Arabia, Russia, OPEC, wider OPEC, will continue to cut production, and demand will start to creep up. Obviously, oil's had a big good day today with those job numbers out of the US. Big hour candle there took us over $39 a barrel. And finally, I can't remember where the last question was. Last question we're going to deal with today was Carlos. Thank you for your very kind comments. You didn't say that. Imran, my friend Imran, asking about. Please tell us gold daily strong on spot. Well, Imran, really, it's no. It looks like it's may have moved over. So if it's daily time frame. Obviously, as I keep saying, apologies for this. It's messy because it's the 1 hour time frame, but the daily. But you can see we're sort of, I had a key daily time frame high at 1725. We broke that and moved up quite significantly. This week, this is the daily time frame, so you can see the significance of today's NFP number. Let me zoom it up. Actually, no, let's not leave it as it is. It's big, but it's no bigger than we had the sell-off we had on Wednesday. So, but the significance is we're under the 1700 level, the 1700 support, and tested below the 1689 level that we got to earlier in the week here, 1689. So we're below that. So 1685 is the next support level, and we're already on that as well at 1682. So that, again, the lows, the suspicions are in, Imran, because as I said earlier, the highs were getting lower. So the 1750 couldn't hold. 1745 this week. If we come into the 4 hour time frame, see how that was our double top here earlier in the week, Monday and Tuesday, and then we moved down significantly, 4 hour retrace, and then moved down again. And you see it's even more emphasized in the 1 hour time frame, obviously the short time frames moving down. But again, just going back to the daily, which is your question. Again, obviously today isn't over, but if we close below 1700, we close below 1685, they're two key support levels, and that would be a negative situation for gold on the daily time frame. I would deem from what the chart is telling me. Okay, that's my thoughts. Right, guys, I've been here an hour plus, and my poor old voice is going. It is Friday. The sun's shining outside. It's looking very appealing. So if there's no more questions, let me give it a couple of minutes. The last question was, that's interesting. The last question was 15 minutes ago on YouTube. So I've obviously bored the pants off you and you've all disappeared unless the link's gone down, which is quite possible, of course. Facebook, I can't see what the time was the last time somebody asked me a question, but Carlos has just said, nice analysis. Thank you very much, Carlos. Thank you for being here and thank you for your time. That's obviously come in since Imran asked about gold, and that was not so long ago. So I guess we're still live. 3 minutes ago, it says. Anyway, I'm going to call it a day, everyone. Have a great weekend, and more importantly, you guys stay safe. And I say, stay safe and keep your family close. And we will get through this pandemic, everybody, wherever we are in the world. So all the very best. Stay safe and take care, everyone. See you soon. See you next week. All the best. Bye-bye.